The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, as we get started for another day, once more into the breach, dear friends. And we're up fairly strongly up here today. 2094 on the S&P cash, up 26 points on that, 2.5 billion shares. So pretty much in line with the volume that we saw on the downside. Of course, getting very close to fund buying. We took off, 30-40% of our shorts yesterday. I am not saying that we are now in a bull market again. I think those days have passed. We are in a ratchet, which is basically 3 steps back and 2 steps forward. And I think we're going to be in that direction all the way back down until we have normalized interest rates. And there are a few more things we've got to talk about in that vein today. But, well, I think that's probably it. There was a lot of stuff going on yesterday. We happen to be short the third world, and they should have probably been down a lot more than they should. That the market didn't react to the 8.5% of China. Probably sold a little bit, that we were oversold. And, of course, we've got bulls that are probably, it's almost a fetish. It certainly is Pavlov's dog, and that is that any chance to buy lower is bought. And that's what that kind of feedback loop makes good bubbles, and why I will not be right all the time, but when I am, I'll make so much money that it does not matter. And that's what's happening right now. At least it is very nice to be on the opposite side of a lot of these trades. You can make a little money on the way up, or you can make a whole lot of money on the way down if you're on the right stock. And that's what we've got right now. We've got a handful of stocks driving the entire market. We're going to get into that today. And before we get started, we'd like to start the show off with a little bit of histoire.
And it's all just a little bit of history repeating.
And if you're into history today, in 1987, it was actually I don't know where that date came in for, because it's wrong. Guess I forgot to put it back in correctly. Let me fix that. 1935. There we go. 1935, on this day, the Boeing Model 299 has its maiden flight. It would be later known as the B-17. It was built as part of an Army Arms Corps precursor to, of course, the Air Force. And a little-known factoid, my father was the first commissioned Air Force officer. Everybody before him had been an Army Air Corps one. He was the first, when they split, he was the first commissioned officer of the Air Force. Although, of course, not probably a distinction without a difference. And, of course, he still had lots of superiors when he became a lieutenant. But interesting, of course, it went into a competition and actually was doing very well until one of the goofballs flying it made a major mistake and wrecked it. But everybody remembered seeing that flight in 1935. They continued to develop it, and it became the bomber of course, the Second World War, only to be outdone by the B-29. But that was designed, 7 years after this. But was everything that everybody was looking for, other than maybe just a little bit faster. But on this day, it had a range of over 1,000 miles, could hold 2,000 pounds of bombs and fly 200 miles an hour, and had, 12? It had 12 50 caliber machine guns on it, and ended up bringing a lot of people home that a lesser airplane would have not in the Second World War. What we have going on, and I was going to talk about it before, of course, is a great deal of people that are, I think, confused about the makeup of the stock market. There's an acronym that's been bandied about for the last 6 months on the insides of Wall Street. That's called FANG. That is Facebook, Apple, Google, or Netflix and Google. And I don't know what else you can say about it. Gilead and Walt Disney together. So those six stocks basically account for more than half of all the S&P 500's 200 billion in gains this year. Now, I want to say that again because I may have got that out of order. 6 stocks accounted for half of all the gains, more than half of all the gains in the S&P 500. 6 stocks, more than half of all of them. If you want to talk about a market that's out of kilter and at the very extremes of profitability, this is normally what you will find. It was the same thing in 2000. You just get very, very narrow, and you get a lot of people talking about price earnings multiples and trying to massage them. This is an incredibly expensive market, and everybody will tell you it's cheap. But kind of neat to see that numbers were out once again this morning from, God, now I'm going to have a mental blank on the guy. He's the one with the, maybe somebody in the den can tell me. He's the guy, Mr. Schuler, who had his housing indicator out, but he also has done a lot of work on prices and what the price you are paying for stocks in the stock market. And he's also showing them that if you wanted to figure them out correctly, it would be about 22 to 1 for a PE on the average PE of the S&P 500, which 19 took us to what, 40 years ago. We're almost back to 50 or 60 years of the highest prices per stock, or the most amount of money you put in to get the $1 back that you could have just about any time, except I think they were a little bit more expensive in mid-1950s. Everybody was rabidly bullish there. And, of course, they had their own dot-com blow-up that no one really talks about much. I brought it up a few times ago. But besides the 1929 dot-com blow-up with basically Motorola and RCA, there was a little-known bubble out there that people forget about. It was the bowling bubble. And yes, all the bowling stocks were priced at somewhere between 10 and 20 times what they were worth going into the late 50s and early 60s, 1961 and 2, I think. I have to go back and look at the exact dates, but something like that. I think it was about 1957. So bubbles are not anything new. Josh Brown, who's on CNBC occasionally, he also has a website called The Reform Broker, pointed out that on Monday, participation or stocks that are also gaining along with the broader market is the lowest it's been since October of 2007. And if you're big into moving averages, I guess that's interesting, but they have not gone back through any particular high. And as far as I can tell, everything continues to look like we are back in a dip in yet another sector of stocks that are doing double repos back up here at the highs. And we've already had basically the biotechs crack, and of course, most notably with BIIB, which we got a big taste of. We got more than a wet beak on that one. But it is also very troubling to see these numbers back up here. We did get a nice bounce out here. It is the end of the month. It is still in FOMC meetings, and a lot of people don't want to be short. But one day, a bounce is not a market, and I'm going to continue to nibble away, and we will find some big winners on the short side in this market. It's just too many sectors are too weak. One of the things that I did look at here that continues to make me think there isn't a whole lot in this market is Apple. It's only up $1.04 and continues to make every signal out here that it is heading back to 115. I don't know how you get the NASDAQ higher if you can't get on a huge rally like today. Apple up only $1. There's also some other news going on out here. Probably the best description this morning, although his analysis was wrong, was Richard Bernstein. He was talking on CNBC this morning, and it was kind of interesting. Yeah, we're done with those. Can I get out of it like that? There we go. Richard Bernstein's on. I don't have any slides for these things because they all just came up here in the last few minutes before the show. But Richard Bernstein was talking, and finally have a great way to describe what's going on. He came up with pretty much the wrong analysis, but he does have the right way of describing it. He called it the global credit bubble is deflating, and anything that is a credit-related asset is also that way. That means if you have anything, let's say like a gold mine that has huge amounts of infrastructure costs, or iron mines, or anything that's hugely industrial that has lots and lots of bulldozers and dump trucks and building equipment and all these capital-intensive stuff. When it was free, when interest rates were nothing, not a big deal. Interest rates going up, a lot of these don't make sense at all. And he pointed that out, that's also probably why we have such a tremendous bubble pre-IPO right now. And Silicon Valley. So many of these stocks are priced probably well over what they will ever be worth. Now, hopefully we've got a video queued up and ready to go. I will wait for an IM from our trusty and wonderful engineer to say that he's ready to go on it. I'm looking, I'm waiting, and he'll show it. He's ready. Go ahead and play it. If you missed it, I've been talking about it for months. Microsoft is launching Windows 10 today. One of my other machines in here is already starting to download the final version of it. Expect to start seeing huge amounts of ads starting tonight on regular TV. And if you're watching on Tiger TV, not in the Den, because, of course, the Den is only 8-bit slow video. Eventually, we got to get out of that. But it is going to be very, very, let me put it this way, a lot of propaganda from Microsoft. It's not that the product isn't good, but they're going long on visuals and probably short on a lot of information. I think Windows 10 is everything I've been waiting since Windows 7, and I'll be going to it just as soon as possible. I've tried just about everything out. I can't think of any reason why I would not go to it tomorrow other than I don't have time. I'll probably have it done and be ready to be on Windows 10 by Monday for next week's show. In the meantime, hang on. We'll be right back. We got a lot more stuff to talk about and a major announcement for a big tech company.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I said probably want to keep a heads up going into the 3 o'clock hour. The reason why, if you were a subscriber to the Tech Insider, you would have understood that basically what we were talking about several weeks ago when I did a special on Hewlett-Packard may be coming out today by Intel. And that would put a giant wrinkle on what I was thinking long-term for HP. But I will be on that. It actually starts as soon as my show's over, so I will get on it. But basically, it amounts to a new way to have memory. Both Intel and Micron are coming out with this announcement. It had been hold very close to the vest. No one knew about it before their announcement yesterday to the press. They're going to have this thing start at 3 o'clock, so you may see some decent movement. You already see the pop here from Intel. I didn't look at Micron, but without getting into a huge amount of who shot John on Micron and Intel, this is a new way that does not use transistors for storing memory. And I think a lot of people are probably looking at Micron and going, okay, there's something there. This could be a real game changer. My guess is that Intel developed all the technology. If you remember before when I talked about these memory companies being more a commodity business, and if you want to build something, you can't build something if there is only one company for the most part building that chip, or you have to buy enough up front, or you have to guarantee that they'll have so many ready for you so you don't get caught short-handed on the components if you're building something. Let's say like Apple decides to buy this kind of memory. Well, what's so different about this memory? Think about your thumb drive today, and think about a thumb drive that was literally 1,000 times faster. And that's what Micron and Intel in the headlines are promising. Now, this is extremely low key, but the other thing that probably the most important thing in this is that they're saying that they're in production now. So I knew there were a lot of kind of announcements getting ready for September with new computers. My only guess is that if there was a more bearish signal for hard drive manufacturers, it probably couldn't be any more than Micron and Intel getting together. And maybe these guys will put out these spinning hard drive manufacturers a lot quicker than you would think. The tipping point always comes incredibly quickly in these markets, but probably a positive for Micron and Intel and a negative for Seagate and also Western Digital as the big manufacturers. But of course, as a commodity manufacturer, you have to build these things to spec. So my guess is Intel has got together with Micron and said, okay, we'll make this, and by two of us getting together, we'll make a standard. Everybody else will have to chase us. They are not calling it what everybody's been talked about for a long time, the MEM resistor, which is basically what this thing works like. But keep a close eye on it. We may have some big movements out here in both of these stocks. Of course, MU, nice bounce already today, not a lot of volume, but it may be a very interesting trader into the close today when this comes out. And I don't know if we can say anything more about it than that. Other stuff on my list of news. Of course, we talked about Microsoft coming out tonight. Probably start looking for those announcements. See if there's anything going on in Microsoft today. Not really. A little doji out here. But I'm going to start seeing some of that tonight. So look for a little bit of flatness, I think, in more of the software companies over the next few days, as Microsoft probably doesn't get much higher out here, but it probably is done going down a few times. If you are a Netflix subscriber like me, it's a happy day. If you're a BoJack Horseman, as it got renewed already for yet another season, and I'm a big fan of it. See if there's anything else on my list out here. I had some emails. Of course, you can always email me at path@tfnn.com. One of my emails out here I wanted to respond to in the last few seconds here is the claim that I'm cynical. I said, no, I'm not cynical. I am skeptical. And I think if you're going to be and stay alive in the stock markets for a long time, being skeptical probably a very good self-preservation trait in these markets, as we continue to see a lot of claims being made. And as I like to repeat here, bold claims mean pretty much bold proof. And I'll say it another way when we come back. Give me a call, 877-927-6648. Send me an email at path@tfnn.com or put a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And somebody's saying I'm playing music or something. I'm not playing anything here. And I don't hear anything here. My engineer's still wondering. Maybe ghosts in the machine. So, never can tell. Anyway, big news going on in technology today. So we'll look at that 3 o'clock hour. And there's some, I couldn't find it right now. I've got it linked somewhere. I'm showing it on the screen right now. For Intel's newsroom, but there's also a webinar or a live stream of the event at 3 p.m. and I'll try to dig through it during the break and find it, but I'll be watching it and reporting, so everybody will get a quick view of it. But this is something that's been around and theorized for 55 years. And if they've actually got this thing working and a product ready to go in production, I think it's a huge, huge deal. Yeah. What else can you say? Andy Heck is reporting in the Den that Brady has his vacation upheld. And, yeah, what a shame. He's going to be home with, what's her name, Gazelle Jump Bunchen. For 4 weeks. Yeah, if I was only had to go home and spend 4 weeks with a supermodel, just how tough would that be? Anyway, of course, 4 weeks for that. And of course, you can beat your girlfriend up, though, and it's nothing. I guess that's the way it works in the NFL. Had a question in the den to start talking about Amgen. And, you basically are looking for 9 million shares today. Had a huge pop. This thing's just continuing to pop up here at the highs. Of course, all the money floating into a few biotechs. Nothing new there either. It's all or nothing in these things. But my guess is you've already seen the sign with BIIB or Biogen last Friday. And the rest of these, probably a lot of people got short on that Biogen news. And now they're just running those shorts. I think and when we look at the greater market, pretty much all the same thing there. That is just you get a market. I don't know what's going on out here. I got a bunch of things flying around. Okay, we're at 2092 on the S&P cash, up 25 points, 2.7 billion shares. So we got a lot of volume, but that's not uncommon for very whippy markets that have been headed down. I don't see anything that changes my long-term call, and that is that we're going to see this kind of 3 steps back and 2 steps forward all the way down. So I'm still looking for a move to probably just a hair under 2,000 before we see this market work out. And you'll have lots of time to have and run around and pop the cork with champagnes and prognosticate about yet another summer low, and of course that we're going to incredibly new market highs. But I will remain skeptical and remain making money on every one of these pullbacks. What else do we have going on here? I guess we can look at some other stocks. We got what else? Andy Heck is telling us some not safe for work things. So we'll look forward to him in the 5 o'clock hour. I'm sure he'll repeat all of those things. But I do digress. Amgen, I guess the volume is, you can make a case that it's up there, but I think it's, you may have one of these biotechs that continues moving higher, the rest probably problematic. Let's look at some of the other charts while I'm waiting for additional emails and everything to go through. Do I have any other questions out here? Not at the moment. Okay. Cabot Oil and Gas looked yesterday like a lot of these companies were getting ready for at least a little bounce. Cabot was one of these a couple of days ago. It actually broke the previous low. And you're looking at 26.01 for it. The January 28th low, $26 and a penny, 17 million, down to 25.50 last week. And of course, kind of pop back into the trading range, which is a nice little buy signal. But you should probably have about 2 or 3 days of continuing volume that you have not. This is one of the better looking ones. Volume actually and energy off that May 14th high did start to decrease a little bit. And I think that there's probably some plays in the natural gas market, and I will probably not be playing it via the actual natural gas. I think that there's a better stock out there that we will be playing in the newsletter, and we brought it up this morning. So you can always check out the front page of TFNN and go to newsletters and check out the path of least resistance. CSX, another one of these that had come down to this huge gap up on the 13th of October last year. It gapped up on really decent volume on earnings that day of 40 million shares. And of course, reason why we took off some risk yesterday, but not all. And that was we came back into that gap up with only 7.5 million shares yesterday. Not a big surprise that we get a little pop out here. But here's why I don't think this is going to last very long. And also all the prognostication for another V bottom in everything, whether it's just like everything seems to have, everybody's focused on some kind of V bottom. And I don't think we've got it. At least I don't see any evidence of that so far. What you want to see is a couple of days of follow on. We'll see. Let's see what else out there. Okay, we're up 25 points. I'm just keeping an eye on things. Anyway, as we're into this gap and you bounced off of it, does that mean that everybody's going to be pumping oil and shipping sand back up north again? I don't think so, but it does mean that you you were at 37 bucks and now you're at 30. And maybe there's some dip buyers out here getting into the rails. Some of these other stocks out here, you don't know a lot about them, but they are starting to make signs that maybe at least some of these companies in crude are finding a way to make a profit or quit losing money. And this is not a big one, EXXI, but just thought I would show it out here. Also, you know, everybody thinks it's a one-way street, either market's going up or down, and it kind of does the cha-cha, a little up, a little down, and just enough to fool you out here. Genworth Financial has been basing out for a long time, and this thing gapped down with 77 million shares to $7.17 on November 7th of 2014. This thing's been going sideways since, and this is exactly what I'm looking for in a stock that bases out. One of the things out here, it's going to be very tough to see, is just the super light volume from this last high out here on May 4th down to the low yesterday, and a nice little doji out here today. Yesterday had 5 million shares. Not much volume today out here. But, you know, the longer you get a consolidation like this, the more probable this thing is going to move. But it didn't just pops down and everything is over and it's wonderful. But I don't know if there's something fundamentally wrong with this company. But one thing I do like about it is this chart. And when I look at something like this, I look at a stock that starts to get my interest. And that is just this consolidation with volume tailing on. I really like that volume since the last big day that had volume, which was the 29th of May. I like these things that just go very quiet, bore everybody out, and eventually you see a nice little pop a few days later. We saw kind of a small bottom signal. Does not mean that the end is over in gold. We've had a little less energy on the last leg down in gold, which is nothing new. On GOLD, which is RAM, you did finally get down to the $58 low on October 31st. That had 2.2 million shares. We got into it with 1.2 million shares yesterday. So are these charts horrible? The answer is no. But again, I'm looking for some kind of huge washout, maybe $50 or $100 down, and then a reversal on the day or something to really say that we've chased everybody out of it, and I don't see it yet. Also, as I pointed to in the Genworth Financial, these things can have very long consolidation times, and I'm not looking for a V bottom yet in gold. GPRE, Great Plains Renewable Energy, another one of these out here that looks, you know, the volume on this last leg down, not all that exciting. And normally what happens is you get a consolidation. That consolidation will either end up with very light volume and people coming in and buying, and or a lot of distribution and selling. And of course, one day it just jumps the creek and is much lower. So we'll be wanting to watch this one. But this has got at least, as they like to say on CNBC all the time, green shoots. At least the energy wasn't down and this thing didn't smack its way through the low, although it had high volume, considerably decent volume over the last few days, and still has $20.31 out here to test the lows. So nothing out here. Other stocks that look like maybe they may be getting ready to make a low are some of these like Noodles and Company, NDLS, recent IPOs that have fallen from grace that maybe still be a good buy at a right price. I'm watching a few of these. Noodles, NDLS, things way off, of course, its IPO high. Again, these are not going to be VMs. They're going to be stuff that we're watching 3 months from now. They're already on my radar, but at least they've given the first signs that these things are not going to zero over the coming months. So we'll take a look at it. NVIDIA. I've never been a big fan of NVIDIA because, of course, they've kind of been left out in the rain without a dance partner. I love their products, and I've got actually two NVIDIA cards, a GTX 750 Ti, and what else do I have in this? The 960? Hang on a second. I've got it written on my PC. Okay, I got a GTX 760 and a GTX 750 in this from NVIDIA. And both of them are pretty hardcore cards. I think they cost a little less than $200 when they first came out, and two of them, so I can drive 3 monitors on my screen. Yeah, pretty decent cards. Anyway, it's just that it is getting more and more narrow as far as PC gaming, and they're just, you know, do they sell some $500 and $1,000 cards? The answer is yes. And unfortunately, though, that market is becoming more and more narrow. There are a lot of hardcore gamers out there as kids that are buying them. So is it okay business? It is. Is it growing? No. And that is probably the worst part of it. They need to be building chips and selling them to other people in huge volumes, and they are not. But, you know, can you say this went and did exactly what it should have done, which is come back gap of the 31st of October of 2014? That gap had 6.4 million shares. Unfortunately, you had some fairly decent volume. You had 9 million shares just a few days ago. Today, you have, what, 3 million shares on the upside? Just watch for that thing to gap down. I suspect that any huge market vulnerabilities will also see the rest of it. Oceaneering International, I think this one's maybe on a longer-term scale out here, isn't it? Is there something out here? Yeah, this one, I mean, talk about heaven and hell. This has been doing ABCs on the way down. It's finally gone through the last level, which is June 25th. Next lows out here look like right around 31 and 32. It's at $37 right now. But pretty much consistent. You get these nice little B2C moves out here. I missed this one, probably the reason I'm bringing it up today. Another fish that got away. Crude oil total return. This is at ETN. I'm not asking you to actually trade it, and I wouldn't touch an ETN, but does it look fairly interesting? But what I was looking at in this market is at least short-term bottoms in some of these energy stocks. We talked about it yesterday, and I wrote about it in the newsletter yesterday. It looked like we were going to get at least some short-term respites out here. March 18th, $9.24, 11 million shares. We came into it yesterday with 2.8 million shares. Got a little bounce out here. But again, the destruction on this is huge. Don't expect, you know, will you get what Jim Wyckoff called automatic rallies out of these lows? And I think the answer is yes. But that just sets up a consolidation period before you get your next huge smack down. And I don't see anything that changes that other than the fact that we have one day of popping quirks and the end of it, and the markets are going to blue sky territory again. And I don't know if you can say anything more about it than that. It's almost getting to be a fetish with bulls out there. You can be long or short. I just don't. I don't understand the Pavlov's dog foaming at the mouth. I'm not foaming at the mouth short. I wouldn't be foaming at the mouth long either. We'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Yeah, we got a lot going on, a lot of moving pieces. 2093 on the S&P cash, 2.88 billion shares. So volume not too bad on this bounce out here today. And I think we've got a lot of shorts on the wrong side going in to the FOMC meeting. And they love to call the bluff of the FOMC. I just suspect that they are on the wrong side this time, in the fact that the FOMC is trying to make it extremely plain that they're going to start raising rates. I think everybody else is trying to whistle past the graveyard of a lot of people believing that there just isn't a chance that they can do it. I think that they've signaled it as many times as they could. Now they're at the point where if they don't do it, it would be the boy that cried wolf. Had a question in the den out here. Coal ETF, KOL. Is there any chance this thing's bottom? And the answer is it's still a political issue. And that is that we have someone committed to making sure these companies go out of business before he leaves office. and I don't see anything that changes or anybody in their way. And it is a big issue out here, in that you're in real problems. I brought this up before, and that is even though this is an ETF, it becomes problematic anytime you're under 10 bucks. Most of the big funds out there will not own an ETF and or own a stock if it's under 10 bucks. The reason why is that value at risk models mean that these things move percentage-wise a lot more than the models allow them to. They would rather own a lot more Disney that doesn't move much to make sure that their models look good for Mr. Dodd and Mr. Frank, neither one of them who probably understood anything that they were doing. And we talked about that last week. It's not uncommon. It is a pattern of history that after every major wipeout in the stock markets and in financial markets, new politicians come along, file new laws, and basically do nothing but cause more problems, and then exit stage left, like both of Dodd and Frank. No longer, of course, standing around and waiting for the unintended consequences of what they've done. Anyway, it's hard for me to say, is it a bounce out here? Yeah. Probably the only redeeming thing that's happened to coal, of course, was that the EPA decided that they were going to try to kill all the coal companies off by just coming up with a bunch of BS. And the Supreme Court basically told them to go stuff it. That their mandate didn't include at any cost, which is basically the way that the EPA was interpreting their rules. And they said, no, not at any cost. You have to consider the cost. You also have to consider whether or not people are going to freeze this winter. Neither one of them they decided to do. So it's given them a little bit of room underneath them. But I mean, that came out last week. It really didn't do anything right away for them, which makes me think it's probably a little bit too little too late. It's just hard for me to not see somebody as committed as President Obama to making sure these companies go out of business, that they won't. And there's not enough people willing to stand in line for them. I would much rather be long natural gas or products of natural gas than probably long coal, until we see a change in the party in the next election. At that time, you might see some movement in coal, but it's hard for me to see anything that looks any better before a change in the parties in the White House. We shall be back tomorrow. Same bat channel, same bat time. Hang on, watch Intel and Micron in the next hour. Thank you.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.